Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk gold futures. Gold's a little bit lower today, down about 40 basis points, a little bit more than that on the lows. But gold is interesting because it just simply has not responded to the equity volatility, and that's been something that's been its hallmark. We have sell-offs of the type that we've had, which really used to be more often. This was a little bit of a shocker for a lot of people, but these are not atypical sell-offs. You went down to correction territory in the Dow off the open this morning, rallied, sold off again, and coming closer toward unchanged. Certainly slightly positive toward unchanged, calming down. But yesterday, during the height of the sell-off rather, gold actually was up a little bit, but then today we gave all of that back down to about 1330 in gold. So no response there. That tells you that this was technical selling in the equities and not necessarily some sort of impending panic in the financial markets. Volume was also normal in gold over the last couple of days. It wasn't low, but it certainly wasn't elevated of the type, even during the rally yesterday, that you would expect to see if there was some sort of a crisis. So not only was price sort of muted, but volume was muted. We had about average daily volume both yesterday and today, and that tells you that some of it was speculation looking for a potential spike in gold if the equity rally, or rather the equity sell-off continued. Didn't happen. They get out of it today. There's your matching slightly above average volume. So again, volume muted as well as pricing gold. And then the dollar rebound that we're seeing right now, it's a two-day dollar rally. That kind of matches. Right now we're working on the second down week in gold. It is only Tuesday, so that could turn around, but last week was a solid down week in gold. This week we're working on it as well so far. And the dollar rebound is in the midst of a two-day rally, and that rally in the dollar has formed a base in the dollar index, sort of a rounding base with the two-day rally just kind of rallying up off of that base, and that puts a little bit of a cap to gold, puts a cap to quite a few commodities actually, because as the dollar rallies, the commodities tend to get cheaper, and gold is responding more to the movements in the dollar than it did to the movements in the equity markets. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.